Stakeholders in the financial services sector have welcomed the planned exercise of Kenya's fast financial risk assessment, focusing on weeding out illicit flows and money laundering. Analysts say the move will anchor Kenya's position as a financial hub in Africa and help attract more capital. Judith Cherono with the details.
To enhance the safety and integrity of our financial system, the National Treasury, together with other stakeholders, will conduct Kenya's first national risk assessment on money laundering and terrorism financing. This will assist the country's competent authorities to assign responsibilities for combating money laundering and terrorism financing.
This announcement by Treasury Cabinet Secretary on June 11, 2020, during the tabling of the budget speech before the National Assembly, signals additional steps by the government to combat illicit flows and money laundering in Kenya. In September 2019, the Central Bank of Kenya concluded the demonetization of the old series 1,000 shillings note, which saw 7.4 million pieces of the old notes rendered junk by the end of the 4-month-long exercise. The demonetization was underpinned by Kenya's quest for a robust anti-money laundering and combating the financing of terrorism framework.
For them to roll out the International Financial Center that would attract global investors, there are a couple of benchmarks that you need to meet to be able to access global capital flows. Your risk assessment for handling terrorist money flows and your risk and assessing how you manage anti-money laundering mechanisms as a baseline becomes an audit.
It is expected that the financial risk assessment exercise by the government will place more demands on financial services sector players to verify the source of and purpose to which capital is deployed within the country.
Each financial service provider has its own parent regulator. Number one, you'd look at institutions that are regulated by the Capital Markets Authority. Number two, you'd look at institutions that are regulated by the Central Bank of Kenya. Number three, you'd look at institutions that are regulated, say, by SASRA. What would happen is the National Treasury would prorate regulations through these institutional oversight authorities.
In March 2017, President Uhuru Kenyatta signed into law the Anti-Money Laundering Bill, introducing stiff measures against persons involved in the illicit flows. The financial risk assessment exercise by the government is now expected to add impetus to the fight against money laundering in Kenya. Judith Cherono, NTV, Nairobi.